Hello, everyone, and welcome back to the J22 Report. I am your host, Johnnie Market. Just wanted to get into a quick video. I haven't done videos in a while. Very busy with my personal life. Not exactly professional, but personal. But anyway, just a couple of topics. Gold has been in a correction. The title of this video is Michael Jordan's The Smart Money. But we'll get into the other topics first, then I'll get into Michael Jordan. But anyway, going back, gold has been in a correction now. And this is one of the reasons why you can't find a good fundamental analyst. Being a good analyst in gold is very hard. And I have yet to find one. And I follow anyone there is to know in a gold market, with the exception of Jordan Royburn. I've yet to find a good fundamental analyst in the gold market. And I consider myself a solid one, but I'm not a name, so I don't include myself as a fundamental analyst because I don't make a living off it. But anyway, long story short, why did gold decline? And everyone will talk about, you'll hear dumb analysis like precious metals manipulation. You'll see Fed raising rates, but the reality is it is the economic data. It's been improving. The PMI, the retail sales numbers was higher than expected. It's actually forecasted to be a decline. Among other factors, the CPI, PPI, month over month was negative. That's my cat, so I'm sorry. But if you look at it, that's why. An improving economy on paper is never good for gold. Just look at last decade. And people can argue all they want that the economy is really in recession, whatnot, but that doesn't matter. Shadow stats and all that stuff. If you want to know on your personal, because in the long term, the real economy will reflect, but inevitability does not mean imminent. And that's what I was saying, is that it's the economy on paper. It's the government data that matters. Gold does not trade based on shadow stats or, credit card debts at an all-time high. It's almost to $1 trillion from some things I read. None of that matters. And so, yeah, I do think the economy's bad. The real economy's in recession. It's not even in recession. It's in depression. It's been horrendous since the 08 or 9/11 in 2000. But the reality is the markets don't reflect that, because on paper, it is looking solid. So that's the first thing I wanted to get into is the government economic data came in better than expected. It's performed solid the last couple of weeks. I do think it will start coming down again. And the other misinformation here is you hear the Fed is dovish and the Fed, this is going to be their last rate hike. Psychologically, they have to get inflation down. Now, I don't think they will, but I think they're going to try until something really, really breaks. I think they have taken a pause from a psychological standpoint, meaning that inflation is coming down and they still want to hike rates, but they don't want to make it look like, if they kept hiking, it would look like inflation's winning. So they had to pause. This is psychological. And so I think they will hike again. And the inflation is just year over year. So it might start coming down just because it's year over year. So as long as it slows down. And then, and the biggest trick they play is they say they want inflation to come down. They don't mean prices come down. They think you assume, if you look at my head, you assume that a lot of consumers assume when they say they want to bring prices down, they assume, bring them back down to what they were. That's not really what they're saying. They're playing Jedi word tricks. They want inflation to come down. They don't want prices to come down. So that's the thing. So they're going to look at it as a victory. But the thing is, this inflation is not monetary. And this is why I say it's hard to find a good fundamental analysis. I rarely see anyone. Most of this inflation was through the pandemic psychological warfare that is going on still in people's minds today. But it's also the crime wave. When people are stealing goods, those are losses for businesses. So how do they make up for those losses? They raise your prices. So that's the other thing. And then just a lot of the logistics. The supply chain is horrendous. That costs more money to comply. And we're also going to get higher interest rates, which is cost of capital. And so another reason a recession is going to come is a lot of this, if you look at credit card debt, a lot of this consumption is based on debt-based consumption. Well, with higher interest rates, that's going to be harder to maintain. So eventually, you're going to see bankruptcies, you're going to see companies go down, or we're going to have a extreme bout of deflation, which will get the Fed to pivot, which I think will happen sometime. I thought it was going to happen sometime this year, but it might be next year. It's taking a long time to draw out, to play out. But that's the first thing. But going back to this title, is Michael Jordan is the smart money. Now, I called the top in the sports market crash because that was probably one of the biggest bubbles in this everything bubble we're in. But Michael Jordan, he's considered the greatest basketball player of all time. Well, he may be the greatest financial genius in sports now because, one, he has his own brand. And the other thing, too, is he just sold the Charlotte Hornets for $3 billion. And the reason he's the smart money is my friend Rahul from AIH Sports and I, we were talking about how we would never actually buy a sports team anymore because over the next 20 or 30 years, I think a lot of them are going to go bankrupt personally. Or they're going to consolidate or whatnot. But I do not think that buying a sports franchise, sports are for the rich. Like, that's the truth. Like, when the U.S. was a very prosperous nation, we had baseball, but that was the only important sport that everyone liked. But we didn't have this debt-based consumption, so everyone could go. And so we went from baseball, and then in the TV, 1960s, that's when the NFL became the most popular sport because NFL is the most fun to watch on TV. Maybe not to go to, but on TV it is. Anyway, long story short, but the U.S. has a huge amount of growth. And a lot of tickets come from corporate games. A lot of companies will give out tickets as like a benefit. They'll use some for themselves, but then they'll use the rest as a write-off for their company. Or, maybe they'll just use them all as a write-off for their company, and they'll take themselves to those games too. And it's a business write-off. But as these companies start going bankrupt, that's going to impact ticket sales. And not only that, as a lot of these companies go bankrupt, they won't have the money to fund a lot of TV. So TV doesn't get much advertising revenue, and since they don't get the advertising revenue, they can't get these TV deals. So I think over the next 20 or 30 years, sports has become a lot more localized. It's not going to be as big. People won't have time to do it. It's going to become a lot cheaper, meaning the tickets, I think, as the real economy tanks. So Jordan, in my opinion, whether it's his analysis or someone told him on the inside, he has a lot of contacts. I think it's probably his contacts probably told him that the market's going to crash and now's a good time to get out of the sports business. So Michael Jordan, being who he is the smart money. And, this is also a lesson in inflation. If you look at the Charlotte Hornets, since he took over head of basketball operations in 2006, they were in the bottom tier, 23rd, 27th, somewhere around there in attendance. They still are. They're hardly a fan favorite. Hardly anyone likes them. They haven't really increased in revenue in terms of number of fans. Their fan base is relatively the same. It's probably a localized team in Charlotte They don't have any national fans. It did not increase from what he paid up to $3 billion. I think it was like 900 million, or I forget the number he paid, but I remember it was a gross. He made more off that buy and hold sale than he did in his whole playing career. It was a huge amount. And he benefited from this sort of inflation. And that's why they love small bouts of inflation, because a lot of poorly run businesses are bailed out. Another example is the Redskins. Snyder bought the Redskins at $800 million, and he sold it for around $6 billion. Well, why was he able to do that? Easy. He did that because of inflation. If you look at it, they were the number one fan base. They had a huge national following. In fact, people don't know this, but when the NFL was going to go on TV and start showing every game on TV, they were worried that no one would go to the games anymore. And they made an argument that if they did, look at the Redskins, and everyone's like, well, very few teams, no team has a fan base like the Redskins. It's a huge fan base. And the reality is they don't have a fan base like that anymore. In fact, they're one of the top 5 worst fan bases, meaning in terms of numbers. I don't think many people like them. So I personally, why was the franchise increasing in value from 800 million to 6 billion? Inflation. That's what it was. And it was the 2, 3, or 4% target that the Fed has, which we don't really know what they say 2%, but yeah, that's why it bails out those type of businesses that have a national, multinational following, or even at least a national brand like the NFL or like a sports franchise. And that's who benefits. It benefits at the expense of the working poor or the working class. It benefits at the expense of them. But yeah, that's basically what I'm saying, is that it's a lesson for inflation. You want to know whose benefits? Look at those two sales. And that's what it is. But going back, the positive of Jordan shows he's a very smart guy, and that he is the smart money. Now's the time, if you own a sports franchise or whatnot, now's the time to be selling. So, and this just came on the top of my head. The last thing I want to get into is this stock market rally. Stock market has gone up a lot. I think the S&P up 200 to 300 points. And this is what bear markets do. This is stock market psychology. They sucker in all the dumb money, and then they roll over. And this is probably what's happening. It's probably a sucker rally. So I called the top. I said I think the 4,700's a top. Let's see if that holds. I think it will, but I don't know. Like, you never know. There could be a blow off top towards 6,000, some cycle analysts. So we'll see. I think if a top isn't reached this year, then I think that top will hold. And I think whatever new high, if there is a new top, I think that will definitely be a hold, because I think the market will start rolling over just based on interest rates, companies, and whatnot. So anyway, if you like this video, hit that like button, subscribe if you haven't, and I will see you next video.